guys, this is Pedro Raufi and you're watching the markets review from Gerchik Co. We're going to start the program with analyzing the news background, and then we're going through the technical analysis of stock market indexes of United States, and we're going to continue today's program by analyzing the market of oil market, the commodity market like gold, silver, and of course Forex pairs. Main Forex pairs, are going to check all of them as well. And at the end of the program, we're going to check the prices of Ethereum and Bitcoin. We're going to check the cryptocurrency main and most popular currencies technical review. We are going to check them also. Stick with us till the end of this video, and don't forget to subscribe and ring the bell. As you already heard from previous time when we actually talked with you, there is some suspicion about the second phase of the war in Ukraine, which is going to be harsh and be really ruthless and so dangerous that many countries nowadays, many banks and many analysts thinking that because of this problem, because of this problem getting really long term, like the predictions telling us that actually this war could continue for a really long time, the inflation problem is going to continue, especially in Europe, and of course United States as well, but it's mainly in Europe. So there's some bad news, as we can say, from IMF, which is a really important organization, and they're predicting that the further market sell-off is really obvious as central banks are adjusting policy. Most of central banks nowadays are going to tighten the monetary policy, which means that they're going to let the QE to get stopped, and they're going to actually, as we say simply, to just take the money from the markets. It means that they're going to give less liquidity of dollar, of euro central banks, and it means that they're not going to give that much of loan to private banks, which means that there would be a less liquidity of United States dollar, of European currency, euro, and that's actually a policy with which is China have been stick for previous 6 months, by the help of which it actually helped its own economy to rise further. But for now, this kind of policy, as IMF is telling us, would really make stock markets to kind of fall further. So there's some suspicion about United States stock market, there's some suspicion about European stock market, but if we think more logical and more realistic, if Federal Reserve System of the United States is telling that it's going to tighten monetary policy, but actually it's just cutting the balance sheet, and it's just playing with the QE system, and it's not really actually going to hike the interest rates that much, because it would really make stock markets to fall really badly. They're not going to let something like this happen, but for European countries and for European stock markets, situation could be not that good. And actually that's all the news which we have for today. Mostly the other news is related to the war, which is continuing, and those sanctions which are continuing to be approved, and mainly next packages of sanctions are going to be against Russian oil supply and gas supply to European countries, which is a really bad signal for stock markets of many countries, but that's a really great signal for gas prices and for oil prices. So the situation which we actually have for now a day. Let's see what is going on with the economy calendar, what kind of releases we are going to have for today, maybe for tomorrow, we're going to check as well. As we see within 15 minutes, initial jobless claims from United States, which is getting less than before. That's a good signal actually for United States dollar. We're going to check the price of United States dollar a little bit later. Philadelphia Fed Manufacturing Index, which is falling. That's not a really good signal for dollar, and both of them are going to release at one time. So we can actually say that maybe the price of dollar is not going to do anything during the European session. Maybe from American session, from the start of today's American session, United States dollar is going to make some impulses or movements. And of course, at 3 o'clock, in the first hours of American session, there's a Federal Reserve System Chairman, Jerome Powell speaks, and it could be actually about monetary policy, which is going to get tighter, but they're not going to hike interest rate. They can actually say that they're going to hike, and there's a suspicion, there's a probability of higher interest rates, but mostly they're playing with QE, they're playing with balance sheet. They're not kind of hiking the monetary, their interest rates as we heard about. And of course, from Britain Central Bank, European Central Bank, there would be the other type of speeches, which all mainly are going to be hawkish, because we know that they're going to be hawkish. We can say that they're going to be hawkish, but if the United States stock market today start to fall further, that would help dollar prices. So mostly we can't really wait from European bank or British bank to hike interest rates in the near future. Maybe United States Federal Reserve System could do that, but not they. So what's going on with coronavirus spreading around the world? As we see, here was a spike in China, which made this high rates of infection here. And then as we are seeing now, the indicator is showing us that we are around the minimums around which we have been located before and other waves of infection. So another wave of infection actually could start really soon. As well in China, as well in Britain, there is some mutation of coronavirus which could happen, which could start in a few weeks maybe, which could make stock markets of Europe, of United States, or even China to a little bit fall. But the main reason and the main impact which they could, with these lockdowns, could actually leave on market is that they could really beautifully dump oil prices. And if China continue to close huge cities in lockdown because of coronavirus infection spreading, that would really put really high pressure on oil prices. So let's check the situation on the charts, and let's find out what's going on now and what we can do with this movements around the markets. So we are going to start from the indexes, United States stock market indexes, S&P 500, Dow Jones Industrial Index, and of course the high-tech main index of Nasdaq. We are going to check all of them. As we see, 4,500 is a really important level, which we had retested yesterday. And for today, I cannot say that prices are going to get above it, but they could kind of consolidate here and don't just move downward or upward. So in the near future, we are going to face some consolidation on the S&P 500 as well. And we just need some trigger for markets to fall further. So there is triggers such as war in Ukraine, such as approval of different type of sanctions against Russia, which could hurt economy of Western economies as well, especially if it's sanctions, if those sanctions are about banning, for example, commercial system of Western countries to cut out a Russian oil or gas supply. If the sanctions would be about gas and oil, this would really make stock markets to a little bit fall further. But for now, for today, we're just watching and we're observing a consolidational movement which is actually happening near to really important levels. 4,500 is a mirror level, a really important level for S&P 500. And this history of price movement showing us that prices are not getting above this level. They're losing amplitude, they're losing volatility, and impulsively they retest this level from downside, which means that prices mainly are going to consolidate. In the best case, in the worst case, they're going to fall further. So you have some suspicion of stock market retesting their own bottom, which is 4,300, 4,200. There is such a scenario which could really happen in the near future. But for now, we could actually observe some consolidation movement and then some retest of local minimums, of local supports, 4,300, 4,200, but not further. That's the only, that's the last potential of the retest of local minimums. So further, I don't think the prices are going to fall. You have to watch what is going on with other indexes. Dow Jones, as we can observe, there's a situation with Dow Jones which is showing us that prices have already lose all of the potential of upward movement. They've lose all the potential of upward movement because of the impulsive retest of local maximum, impulsive retest of local resistance, and because of the opening of this gap, which is here, have opened, which means that this gap have to get closed during next sessions. And all this means that prices of indexes are going to continue this consolidational movement, and they're not really going to get higher, because now they're retesting a really important level about which we're telling you that this level is really important from 1 month ago, or maybe month and a half ago. We actually told you that $35,000 for Dow Jones is a main target level, above which we have to buy, under which we have to sell. I told you about the S&P 500, which is a main target level is 4,500, above which we are buying, under which we are selling. And of course, Nasdaq level, main target level, which is 15,000, above which we can buy, under which we can sell. And we actually told you that predictions are about the retest of these levels by bullish impulse and the next reversal. Now we're actually observing next retest, a very fast retest of these levels again. So this kind of retests are going to actually continue by the next amplitude losing, which means that volatility after the breakthrough of this maximums is going to get lower and lower and lower, and this would mean that prices are going to fall further. So the main prediction here is about continuation of consolidational movement and the next fall, which could just cause the retest of local bottom, the local minimums, 33,000, 33,500, let's say 33,500. These levels could get retested, and that's not that bad. It doesn't mean that prices are going to fall really badly. No, they're just going to fall and retest local minimums, and then they're going to return to the main phase of upward movement. Let's see what is going on with Nasdaq. The main, as we say, high-tech index of the United States stock market as well. 15,000 have been retested. Prices are really, they're located further than 15,000. They're located around the level 14,000, which is now retesting, but prices could impulsively, speculatively retest the local minimums again. So here we have a prediction of the next downward movement, but if it's going to be impulsive, it means that this movement, this downward movement, would finish sooner as we can even think. So in the case of impulsive retest of 13,700, 13,500, we're going to return to the upward phase as fast as we can. But in the other case, if we get squeezed to these local minimums, this would be a signal of the continuation of downward movement. So what is next? Next, let's see what dollar index, DXY is showing us. United States dollar index, which have been rising for yesterday from previous time. If you remember, we talked about this sharp wedge formed rising, the sharp upward movement, which is combined with actually volatility shrinking, and that's a signal of reversal. Actually, as we told you, that's a signal of reversal. There is no convergence. There's no divergence here between local maximums and the line of oscillator RSI. There's no divergence, but we told you that that's actually a reversal signal. But as you see, the prices started today by opening of a gap. The gap means that the downward, in this case, it means that the downward potential have been already closed. So if we are going to fall further, it doesn't mean that you can open short, for example, mid-term short position or even short-term short positions for dollar and for pairs with dollar. For example, you cannot sell that much United States dollar to Japanese yen, I think even to Swiss franc. You cannot buy for a mid-term euro or pound or Australian dollar and New Zealand dollar. Cannot buy them because this opening of gap, which actually we told you that this kind of shrinking of volatility in the form of upward wedge after the breakthrough of local resistance, that's a signal of next reversal. But the reversal happened really fastly without, it happened when markets were closed. This means that actually this gap have to get closed, but next downward movement which is going to happen, it's just a speculation. It's just a consolidation. So 199.50 is a level, that's a range which could get retested, and after the retest of this range we're going to have next reversal and return the price index. The index price could return into a upward phase again. So 99.50 and 100 is a main range under which we could sell and above which we don't have to sell. So you don't have to open midterm short positions before we get stuck under 99.50 at least. And there's two different type of signals: a really fast downward movement, a really fast opening of the prices after picking, as we say here. So dollar prices could really continue to fall, but this downward movement is really speculative. You have to be really careful with it. Let's see what is going on with euro prices. So this correctional downward movement of dollar actually helped euro, helped pound to make some upward impulses. Just look here, this upward impulse, which means that prices have already lost the potential of upward movement, the potential of bullish trend for today as at least. So any kind of upward movement, continuation of upward movement for today, for this day, this would be a speculative movement. You don't have to buy because of this kind of movements today, because actually the potential have been ended, and prices could really speculatively show you that, oh, we are going to rise, but actually they could really close as fast as you even imagine, close under the maximums of the day and just start to fall further during next days and next sessions. So that's the situation which we have with euro. Euro is really under a really important mirror level now. it's 1.11.909T, which is a really important range. Before we get above this range, we cannot say that prices are going to rise further in midterm. And especially if we have already retested this range impulsively, we don't have really any reason to believe that euro, pound, Australian dollar, or New Zealand dollar are going to rise moderately in near future. No, I'm sorry. They're going to consolidate maybe. They're going to retest local resistance, but they're not going to rise moderately. They're going to just make consolidation to go further. So what is going on with pound price? Let's see. As well, pound prices have kind of rised because of this correctional downward movement of dollar index. So this upward movement is not really powerful. The speed pound is even more powerful than euro, but as we see here, prices are showing us that local mirror level have been retested and prices, they don't really want to get above this level. The only level which is now in near future have the most important usage and meaning, which is a really most important level for GBP to USD pair, is 1.30. That's a psychological level. That's the nearest level which is now near to us, and that's the psychological level. So the retest of this level will show us where prices are going to go. As we see here, there's a really long-term squeezing of prices, the squeezing of volatility to this level, which means that mostly with a high percentage of probability prices are going to retest the local minimum. They're going to break through local minimum. This could be a speculation, but this could really happen, and this downward movement could be really, really sharp. So we just wait for that, and we know that 1.31, 1.32 are the local maximums which we can use to get into the limit selling orders. 1.31, 1.32, limit order for sell, stop loss a little bit further, and we can actually get into selling positions if upward movement during the day is really impulsive. If we observe an impulsive upward movement on the chart of euro, pound, Australian dollar, and New Zealand dollar in near future, this is a really good signal to get into limit sell for midterm, for example, some sessions trading, and just wait for prices to fall further, because this moderate phase of falling haven't finished yet. Not for pound, not for euro, not for Australian dollar, or even New Zealand dollar. So what is going on with Australian dollar? Let's see. Australian dollar to United States dollar. This is a correctional upward movement which have taken place because of the correctional movement, correctional downward movement of dollar, of United States dollar. So it have just retested the local mirror level. It's still located under this mirror level of 0.75. And before we get above this level, and before we retest 0.75 from upside and then start to strengthen above it, there is no reason, like here for example, there is no reason before such scenario to believe in the moderate continuation of upward phase. There is no reason for it. So we just can rely on some possibility of impulsive speculative retest of 0.75, 0.75, 50, and after that prices are going to start again to fall, and they're going to start to fall maybe to 0.74, 0.73. But mostly, if we pay attention on the movement of Australian dollar and New Zealand dollar, they're more powerful than euro and pound. So here we are not going to say that prices are going to fall further for Australian dollar and for New Zealand dollar. Mainly we can say that prices are going to continue the consolidational movement. Only continue the consolidational movement, and they would fall between the channels. They could fall between the channels to the local minimums, and the next phase is going to be upward. So for Australian dollar and as well for New Zealand dollar, unfortunately we cannot say that prices are going to fall that much, because Australian dollar and New Zealand dollar get a really high impact from mostly Australian dollar, not New Zealand dollar actually. Get a really high impact of oil prices rising. When oil prices rising, Australian dollar rise really well, as Canadian dollars, as ruble, Russian ruble, as peso, Mexican peso, and different type of oil currencies. But for New Zealand, our situation is a little bit worse, and the New Zealand dollar is a little bit weak than Australian dollar. Here we can say that prices could, in the near future, could impulsively retest 0.6850, but mainly they're going to continue this consolidation movement between a range of 0.70, 0.6850, 0.6750. So there's a range 0.6850, 0.6750. In this range, we're going to continue to consolidate. So prices are going to actually continue the consolidational movement. And the next comes oil prices, WTI. We're going to get to the crude oil price. We're going to check the natural gas prices as well. So as we said from previous time, oil prices have been retested local minimum, rised again. Now they're going to retest the local minimum again. But there is a potential of downward impulse. 97.80, 97.50 maybe, or as we say, 97 from 97 to 100 is a range which could get retested in the near future. And I don't think the prices are going to fall that much, but mostly they have to rise further, because there's different type of fundamental reasons why oil prices have to rise in the near future, especially if sanctions get harsh, and if sanctions get more dangerous against Russian oil industry and gas industry. Oil prices could continue to rise even despite all of this squeezing of volatility near to local minimums, even despite all of this squeezing. So 100, let's say 198, 97, let's say just 195. So it would be a range between 190, which is more logical. Let's say just 95 is the maximum potential of oil prices downward movement. If China came out someday and say that it's going to close more cities because of lockdown, because of COVID spreading, the COVID infection spreading around China, if China come out and just tell us all that it's going to close to lock down more cities, this would make oil prices to fall further, but we don't have this impact for now. But this could be a really speculative thing as well. This could be a really speculative thing because it would cause oil prices to impulsively fall, but the thing that next we're going to have is the moderate rising of prices. So more buyers could get into the market. And let's see what is going on with the natural gas. As we said, natural gas from previous time, and natural gas, we said that natural gas is going to rise further, but for previous 3 or 4 days after the start of the second phase of the war in Ukraine, we saw that this phase of war is really lazy, and it's going to continue kind of longer than the first phase of the war, because some different reasons about which we're not going to talk about, because it's financial thematics. So because of that, oil prices and gas prices kind of are showing us that they are correct, they have a correctional downward movement. But this correctional, we actually talked to you about this correctional movement. We told you that it could happen from previous time. We told you that there is a suspicion of correctional movement to 750 and 650. We haven't yet retested 650. We could retest it, but I don't think that further under 650 there won't be any targets for sellers. I don't think so. So 650 is the end of this potential, which could get retested, and then prices are going to rise again. Or maybe they're just going to continue some consolidational movement. They're going to make up and just go through some consolidations above $6 and under, for example, 7, and inside this corridor, inside this range, prices could consolidate for near future, because war phase now, the second war phase is really lazy, and many countries are kind of going to, so they're telling that next package of sanctions are going to be against Russian oil supply and gas supply, but they haven't yet approved them. And Russian president yesterday, or I think that today, said that it's going to stop to invade further in Mariupol, which have been invaded kind of fully by Russian army, and there's still some Ukrainian soldiers which are fighting, and Russian president just today said that it's going to stop a little bit this phase. It's going to wait a little bit. Maybe they're making some corridors for refugees to get out of this city, but main phase of the harsh phase of war will return, but not today. And because of all of these things, we told you that maybe because of this laziness which have started 2 days ago, because of that, gas prices, oil prices won't really rise that much that we want, maybe. And we said that the stock market even is going to get a little bit lazy. Maybe it could actually continue to strengthen further, but it would be a really moderate strengthening. It would be a really moderate upward movement. We told you about this before yesterday, and we told you that the phase of rising in stock market could really start to continue, but it would be really moderate for now. And because the war, second phase of the war is kind of really lazy. And oil price and gas prices, now they started the correctional movement. In the near future, they're going to consolidate and then return to the main phase. So we are going to have some harsh facts from war crimes in Ukraine, different type of news, and different type of sanctions approval from Western countries to Russia, so which would make gas prices and oil prices to rise further. So we're waiting for gas to just continue this downward movement, to just finish it after the retest of 650, and then start the consolidation, and then return to the main upward phase. What is going next? Next comes United States dollar to Canadian dollar, which is related. The Canadian dollar have a straight correlation with oil prices, and as we see here, dollar prices have been have felt a little bit for previous day to today, and that's what happened. That's a really speculative, impulsive retest of local minimum, after which mostly we are going to have a consolidation, and then the return. Then prices are going to return to main upward phase, moderate upward phase. So here we had already retested the local minimum. Potential of next downward movement is not realistic. We cannot speed on it. We cannot say that we are going to sell further. No. We are just going to maybe have some consolidational movement, have some speculative downward false breakthrough of local minimums, and then we're going to just consolidate and rise further, maybe moderately, and then start to rise like sharply. But mostly for now, prices are showing us that the technical factors are showing us prices haven't already finished the potential downward movement, and dollar is going to rise further. United States dollar is going to rise further. Oil prices could retest local minimums, because of the laziness of war phase, second war phase, which is now continuing. So what we are going to have next is United States dollar to Mexican peso, MXN, which is oil currency as well. Impulsive retest of local. Here actually we have a retest of mirror level of 20. $20 is a psychological level. 22, as we said, is that those are the levels which could retest. But we really cannot say that prices are going to rise sharply in the near future. Maybe they're going to rise moderately. Mostly they're going to continue the consolidational movement above 90.80 and under 2020. So in the range of 1980 and 2020, in the range above 1980 and under 2020, they're going to have the continuation of consolidational movement. And the only thing that could make dollar prices to rise further is Federal Reserve System interest rate hiking, which is not going to happen actually. But oil prices will start to rise. So we here just need for prices to finish this correctional upward movement and then get into the sells again. So we're going to go through the commodity market, gold prices, and we're going to check gold prices. As you know, gold prices rise when something is going wrong with the stock market. And when stock market is kind of starting to rise again, for example, from previous 2 days, we told you 2 days ago that because of this laziness of the second wave, the second phase of the war in Ukraine, situation with stock market is going to be a little bit better. So they're going to start to moderately strengthen further. And this moderate upward movement won't really continue for long term. Stock markets indexes of United States have to, technically they have to retest local minimums. It would happen within 1 week maybe. They would retest local minimums. They would impulsively retest local minimums. But that's not any type of bad signal for long term. It means that they're just getting ready for next buyers to get into market, and they could start again return to the main upward phase. But what would happen with gold prices when stock markets really doesn't fall that much? Here for the gold prices, we can have a prediction. We actually already had the prediction of the retest of local minimums and the next moderate upward movement. So here we have an impulsive retest of 1,920, 1,900. This range could retest it in the near future. But after the retest of this range, 1,900, 1,920, after the retest of this range, we are going to get into the main consolidational phase, which is continuing for previous month at least. So here we cannot say that prices are going to sharply rise. No, because stock market is not going to fall that much. Stock market of the United States is not going to fall that much. It could speculatively in one moment, in just 5 minutes, sharply retest local minimums and then again return to main phase. So there is no reason for gold prices to moderately long-term rise, but it could rise inside this consolidational corridor which we have. So 1,900, 1,980, or as we can say 1,920, 1,960 is a local nearest consolidational range inside which we can continue day tradings, and we can actually trade because we have a mirror level nearby 1,940, which is a mirror level under which we can sell till 1,920. Then we can again buy after the test of 1,920, 1,900, then buy till 1,940, and then again sell or just wait for prices to get above 1,940, and they could next go up to 2,000 or 1,980. But this would happen only in one case, if stock market prices start to fall. And this downward movement, due to our predictions, could be really fast, and you won't really catch it. So maybe for gold prices, you need to be and for trading by gold, you have to be really careful. So let's see what's going to go with silver prices. Silver prices here. Silver prices, spot US dollar. Yeah. Impulsive retest of local minimum is already happening. 24.50, 25 is a range after the retest of which we are going to return to the main upward movement. But just as I said previously, don't forget that here consolidational movement is the main thing that we're going to have. Impulsive retest of local minimum, it means that after the retest of 24.50, 24 at least, we are going to stop. The downward trend is going to stop. And next thing is that we are going to have is a consolidational movement with impulsive retest of local minimums with the next return to the main upward phase. And the upward phase here for all commodity for now is really moderate. So you just have to know that the upward phase mostly is like this, like here, it's like this, like here. It's a really moderate upward movement. And don't forget that $25 for silver, as like as for gold 1,900, 1,920, and for silver is level 25 actually, but for gold is level 1,900. It's a mirror level under which prices would continue to fall. But if we get less amplitude, if we get the shrinking of volatility under this level, this would mean the prices are going to return to the main phase, upward phase next, and they're just going to continue the long-term, mid-term consolidational movement, which could continue. And let's see what's going on with Palladium. Let's see platinum and then Palladium. Platinum retested 1,000, really impulsive. It's a really impulsive retest of a really psychological level. And we have a shrinking of volatility. If you pay attention on 1 hour chart, you can even see a convergence happening here between minimums and the line of oscillator, which is a really great signal of next reversal. So prices next are going to continue the consolidational movement. The range is going to be above 960 and under 980. So 960, 980 is a range inside which we are going to continue this consolidational phase for platinum. And for Palladium, the retest of 2,400, 2,600, it's really showing us the prices are not going to rise that much. They're not going to rise that much. They're going to just stop under these levels, and they're going to mainly continue the consolidational movement. So range of the next consolidational movement here is about above 24,000, under 26,000, let's say. I'm sorry, 2,400, 2,600. 2,400 is here, and the next level is 2,000. Let's say 2,400, 2,500. I'm sorry, 2,400, 2,500 is the next range of consolidation movement. But I think that local maximums are going to be a little bit lower. So a range mostly consolidational. Next consolidational movement could continue inside even 2,300, 2005, like maximum, from 2003 to 2005. So here we have a prediction that could mean that prices are going to continue the consolidation movement as well. But Palladium is rising better than Platinum because Palladium is under the Western sanctions, which Russia supplies to different countries for microchip making, for semiconductor industries, and it's under sanctions. It's like a steel, as like as coal. So the prices of this kind of assets, this kind of actives are going to actually rise further anyway because they're under sanctions. Next comes the review of the most important defensive currencies or pairs, Forex pairs, United States dollar to Japanese yen. As you know, Japanese yen is a defensive asset, is a risk asset like gold, like commodity. And as was told you from previous time, Japanese yen is going to get into a consolidational, this pair is going to get into a consolidational movement because we had retested local maximums. We had, there was some formation of divergence here with that we told you this divergence is a signal of next reversal. We have observed this divergence yesterday and day before, and this was a really good sign of reversal. But as we told you, reversal here, it means that prices are going to just make some consolidation corridor, then they're going to start to rise again. So we cannot say for now that we can sell further. Maybe for near future, in nearest hours or sessions, we could get impulsively, speculatively retest 127, maximum 126.50, but that would not really mean that prices are going to fall in midterm. This is a really important. This is really just a possibility of an impulsive retest, speculative retest of local minimums, after which prices are going to mostly continue the consolidation movement, and then they're going to rise further sharply, as like as here, for example. So for United to Japanese yen, we told you that there is a possibility of this kind of correctional. This correction has been happened already, and there is no potential for the next moderate downward movement by which you can trade. There is just a prediction of impulsive movement with which you can actually scalp. Maybe you can trade like a scalper, but you cannot here open sell for a midterm or for even short term or inside the 1 day. There's a really bad situation for sellers. There could happen some speculation, but no moderate downward movement. Let's see what's going on with United States dollar to Swiss franc, which is another defense asset, another risk asset. And as we see here, there is no chances for downward movement. There is no chances for downward movement. There's a chance for buyers to get into limit buying orders after there's this 0.40, 0.9450, 0.94 maximum. I don't think that even we are going to retest 0.94. We are just going to maybe retest 0.9450, 0.9430. And then we're going to reverse and just continue the upward movement. Consolidation could really happen here above 0.94 and under 0.95, 0.94, 0.95 is a range inside which we could consolidate. But after this consolidation, mostly we're going to continue the upward movement. So if you're a seller here, just pay attention that you can make some money, maybe 2 to 5 hour short signal, 1 hour short signal, 15-minute short signal, not 1 hour short, just 5-minute and 15-minute charts for you. If you're a seller of dollar in near future, it could help you, but don't forget this situation is going to finish really fast. And we're going to finish today's program by the analyzing of the Bitcoin prices and Ethereum prices. So the main cryptocurrency assets. From previous time, we told you that prices correctionally started to rise. So it's a corrective rise of prices. We told you that prices would retest 4,500. Let's see, due to the 4-hour chart. Yeah, 43,000. That's the thing that we have today. And as we told you from previous times, after the retest of 47, we have reversed. But what is going on now? From previous from previous session, we told you that prices in near future are going to make some impulsive, speculative, upward movements, but you don't have to believe them as a holder or as a long-term trader or as a mid-term trader to buy and just leave it alone. Because Bitcoin for now is going to show that it's rising, but that's a really false breakthrough. So we told you that prices are going to retest for 3,000, 45,000 maximum. This could really happen, but after we're going to have a reversal. So as we said previously, that from previous programs, that the retest of local minimum caused prices to rise. Here we are going to have some divergence. I cannot not to see it actually, because here we are going to have some divergence. This divergence could start to act after some impulsive upward movement. So if you're a buyer, don't believe in this situation, you have to wait here. You have to really wait here. 43,000, 45,000 is a range under which you have to sell, above which you have to buy. Inside 43, 45, there's only the consolidation, there's only reverse. could happen. So 43,000, 45,000 is a range after the retest, of which mainly we're going to reverse downward again. And the term prices. It's retesting already mirror level of 3,200, 3,300. Above these levels, we can buy, but I don't believe that prices are going to strengthen above 33,000. Maybe in near future we're going to retest 3,200, 3,250, or even 3,300. But after the retest of 3,250, 3,300, mostly we're going to reverse again. So here is a prediction of impulsive false breakthrough of 3,300, 3,250. But the next movement is not going to make you happy, because it's going to mainly disappoint you. After this kind of situation, after this kind of technical signals, we mostly are going to have a reversal. So that's all I can tell you about today's markets, guys. Don't forget to subscribe on the channel and ring the bell so you would know what kind of programs and when we're going to publish on our channel. Don't forget to check our official website and use different type of instruments, platforms, and courses about tradings for professional traders and for beginners, which we have on our official website. You can actually see different type of these courses, different type of packages for traders, and you can use them. You can actually just use them. Most of them are for free, and you can just test them on your platform. And different type of scripts, different type of robots, different type of signals which we have, and you can just check this information on the main site of GerchikCo.com. And don't forget to check all this information on the main site, and don't forget to take care about yourself. Until next time, have a good tradings. Bye bye.